Yeah. Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, March the 6th. The year's 2025. Let's talk trading. Flip-flop box with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. And as always, have risk management in place so you never lose more than you're willing to lose on any one single trade. So Walmart, we had a trader, I think it's maybe a week or more ago, wanted us to do a video, an in-depth video on the flip-flop box.
Okay. I don't know how in-depth you can get, only because it's such a simple concept. But yeah, we can certainly talk about that.
Okay, so let's see, you usually use it on the 1-minute chart, right?
Yes, sir.
Okay. And just so everybody knows,
okay, we just had a flip-flop trade that we could have taken on the 1 minute.
Right. So the indicator that I wrote is called TRO flip-flop box. Simple. So first, let me tell the traders what a flip-flop is. It's when the colors of the candle change or flip-flop. So right here we have a flip-flop when it went from black candle to a white, or a bearish to a bullish candle. So, and then we had one right before when it went from a bullish candle to a bearish candle. So you can see here, price flip-flopped. Oh, wow. Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9 times.
In a period of 9 minutes.
Right.
So that's pretty quick, you know. And there are a couple things that was one of the issues when I first started trading flip flops, was the fact that you can get into these markets where you see exactly what you're saying, you know, where flip flops 9 times in 9 minutes. That'll drive somebody insane, you know, trying to keep up with all that. So I started putting things in there to disqualify some trades, you know, just to go and slow it down. Of course, the easiest way to disqualify trades or slow it down is move up the time frame, right? Go from a 1 minute to a 5 minute. That's one way to do it. But I chose to stay on the 1 minute. I like trading the 1 minute. I don't know why, but I just love trading the 1 minute, probably because it gives me the best indication of what price is doing right now. Now, you know, price is the same on all time frames, but at the same time, you have a better, I think you catch on quicker. Hey, price is moving in a particular direction, or price is starting to change direction on a 1 minute. You just seem to, or at least for me anyway, I seem to go and my brain picks up the idea that, hey, price is changing in direction. And so that's probably why I like going and doing it. Plus, the fact it does give you a little bit more action. There's no question about that. I like things that, you know, I'm a squirrel, so I need to go and do that. But in any case, so some of the things that are different than what the indicator does is that um, the indicator will go and show you flip flop, and you can go back several candles. I only look at the 2 most recent candles. I don't go further back than that. If it happened for older than that, I consider it off the table. You know, that doesn't necessarily mean that you can't trade it. It just means that that's what I do, just to disqualify some trades off the table, just because otherwise you just got too many things happening. Or at least for me, I've got too many. Let me clarify. I've got too many things happening, and I need to slow her down a little bit. That's how I slow it
So
down.
for example, right now, see the flip-flop lines are from 3 candles ago. So the way you use it, those lines wouldn't appear there.
Exactly. I wouldn't use that.
So you know what? I don't think I have that as an option, or do I? Bars ago. Yes, I do.
Yeah.
So it has to be 2 bars ago then, right? Or 1 bar.
1 bar ago.
Will that even work? Let's take a look.
I don't know. I've never tried it.
Yeah, it does.
Cool.
So there we go.
Okay. Second thing I do is like right now we have a flip flop. I would take this trade.
Well, it's
Um,
over. It's good for 4, almost 5 pips right now.
yep, exactly. But I would have taken this trade. Well, it wouldn't have. Um, yeah, I would have taken this trade, and the reason why is because the direction of the trade would have been long, and my most recent candle was a long candle. So I'd like to go and take that trade just for that reason alone. I don't like going against it. Again, there's no reason not to do it. It's just a reason just to disqualify some trades. That's the only reason why I do it is to disqualify some trades. Um, yeah, again, you know, buyer beware. You know, your mileage may vary. You got to figure out how you're going to go and play. And the thing is, why does I think the biggest question really to answer here, Euro, is why does it work? You know, and essentially all you're doing is you're looking for price to be moving and creating. You know, if you're going long, higher highs. You know, if you're looking to go short, you know, you were looking for candles to go lower lows. And all you're trying to do is pick up, you know, 1, 2, 3, 5 pips, you know, something in that range. You're not looking to get you 20 pippers. That's not the point of this. You're doing smash and grabs. And what you're doing is you're trying to get in on the action as quickly as you can, get your get your pips and get out. So, you know, that at least that's all I'm trying to do. Go in, get your pips, get out. You know, and just do it continuously. What can happen is like, you know, I got a ton of pips today. And I believe just about every one of those was off of flip top trades. And I've only been trading now at this point in time for 2.5 hours. But I've also got 25 trades, you know, and the thing is though, it's just like grab a pip, grab a pip, grab a pip, grab a pip. And just kept on doing it all day long. And I've got my efficiency is 99.8. Now that's I, I normally don't have it. My efficiency usually is down about 84 to to just short of 90%. I usually don't win that many trades, but today was just one of those days where I got lucky and you know all my trades were except for one, you know, was worked out. So people don't believe that's going to happen every day. I got lucky today. It just turned out that way. And then the question comes down to why did I get lucky? If I think about it, what I did was, again, this whole idea of disqualifying trades. I tried to go and take trades that were happening at what some of our friends would go and call support and resistance lines or psych lines. I was trying to take trades at those places. So if I got a flip flop that happened to line up with a psych line, what do I mean by a psych line? 0, 25, 50, you know, 75, any of those lines. If I got one that lined up with that, you know, and I got a flip flop at the same time, I said, my thinking on that is that, hey, that's probably good for, you know, 2 or 3 pips. Let's go and take that trade and be ready to, as soon as you get it, get out. Maybe even when you set up your trade, you know, you go in with your whatever method you use to enter the trade, have it automatically put in a TP, you know, where you're only looking to get 3 pips, so that it immediately goes in and at the same time sets your TP for you. You know, that's again up to you how you want to go do that, but that's what I generally do on a trade like that. You just do it over and over again. And that's the thing about this. You know that you're going to be, when you're doing this, you're going to be taking a ton of trades. And I know some people don't like that because every time you go to trade, you're in the market. You're in the market, and therefore you're taking a chance that can run against you. Well, I don't look at risk that way. Risk of the market is what they call that, because I don't think I have any more or less risk than the guy who goes in and sits in a trade for 2 hours, and I go in and out of trades, and I'm in the market for 2 hours. It's just I took many trades back and forth through it. I think what the real risk is how long you're in the market as opposed to the number of trades you take in and out.
Well, yeah,
That's just me.
that's how long you're at risk.
Exactly.
Yeah.
That's how I look at things. You know, some people say, "Oh, you can't go and do that. Look how many trades you took. Look how many times you put yourself at risk." Well, if you get into a trade and you're in a trade for an hour and a half, look how long you were at risk. You know?
Yeah. Yeah. Now on the flip flop, do you use any other indicators um to
I
filter trades or to tell you get in, get out?
um, yes and no. I've got other things on the chart that help me out, but they may not necessarily um, really filter the trade. And let me just go through a couple of them.
By the
One,
way, we just have a flip flop box here.
yep, we have the front box to the downside. So, but if I put on my chart, I'm a structure type person. I like to have lots of structure in my life. So I put on my chart horizontal lines every 5 pips, and I do that more necessarily, not necessarily to go and get myself in or out of a trade, but more of so that hey, I can see how far it's moved, and because I'm only looking to get a little bit, it gives me a good indication. Hey, is this thing starting to run out of steam? You know, and I can see how fast it's moving in relation to those 5 pip intervals. So if I see the price is moving and then all of a sudden it slows down in its movement, that tells me one or two things is happening. Either one, it's catching its breath and it's going to explode, or two, what's happening is that it's running out of steam. So I'll use that as not as a reason to get out of a trade, but more of okay, that's just something to pay attention to. Let's go and just let's watch that and be careful with that. Um, the other thing I like to do is uh, either put the indicator two out on the chart, which is the EMA5. Um, I'll either put EMA5, just the squiggly line out there, or I'll put indicator two out there.
Squiggly line,
And
that's blasphemy.
I know. I'm not taking. No reason why is because if I'm going to take a long trade, hey, how nice would it be if I take a long trade and we're going into the direction of the EMA5? You know, because what is EMA5 telling you? It's giving you a very very quick observation of what's happening right now in the market. It obviously candlesticks are the most current thing. But EMA5 is kind of it's condensing that down a little bit for you. And if I know that let's say I want to go long, and I'm below EMA5, but I'm only below it by 2 or 3 points, not 2 or 3 pips, but 2 or 3 points, and I'm moving in a direction of EMA5. And EMA5 is now taking a directional change where it's starting to run up. That gives me some confidence that says, hey, yeah, this is probably a good trade to go and get in. So I don't necessarily have to be above it, but I need to be moving in the direction of it. Uh, and not even have to be. It's more of I like to have it as a, I don't know. I want to go and say maybe a comforting thought more than
Right.
anything else. You know, um, let's see what else do I do.
Well, one of the things I do is I looked where the last three ball was, and a lot of times I don't want to trade against it per se. And I know one thing you said, you like sometimes if indicator two is inside the box, um, and you definitely want to go with the color.
Right. Yeah, I think it's a good thing, and I think you are a little bit better with that than I am. I probably should do exactly what you said. You definitely want to go with the color.
Yeah,
I
and you know
don't.
what?
We're at time.
15 fastest 15 minutes of trading is just about over. So we'll revisit the flip flop box. And if you have any more questions about it, let us know. Be happy to answer them. And always remember and never forget, traders, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.